Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I titled it Not Since December 2019, and we're going to take a look at that. I'll talk about that and why in just a minute. We're going to look at the S&P 500, look at several of our indicators, and talk about an interesting timing with Friday, September 3rd. But first of all, I just want to mention, we haven't gotten a video out in 2 weeks. And I have been traveling the last 12 days. We got back this weekend, but spent 12 days in San Diego. And no, I was not on vacation. We were at the University of San Diego Jacobs Medical Center. My youngest son was having a brain surgery, have a tumor removed on his left side. He had had a similar surgery like that in Los Angeles 11 years ago. And the doctor that performed, the primary doctor, the neurosurgeon that performed that surgery 11 years ago, was Dr. Mark Schwartz. And he had moved down to San Diego. They built a team doing something very similar. And it was just a fabulous experience. The entire surgery that happened was everything we hoped it would be. Dr. Mark Schwartz, Dr. Rick Friedman. I can't say enough about it, and I think I'll create a blog post on my website talking about my son's experience and talking about what he went through and what's going on there. But these guys were fabulous. I had to give a shout out to these guys. It was just an amazing facility, amazing doctors. All right, so back to the market. So here we've got the three, Dow, the S&P 500, the NASDAQ Composite. The Dow was down 87 points this last week, the S&P 500 up 26, and the NASDAQ Composite up 234. So the S&P and the NASDAQ are sitting at all-time highs. Well, what did I notice? I noticed that when I looked at the S&P, I said, wow, look at that trading range on this. I mean, it's just amazing. The entire trading range was 32 points, 32.09 to be exact, between high and low. And we hadn't seen anything that tight since the week of December 22nd, 2019. That's a holiday weekend, okay? And you're just like, there was no holiday weekend this last 5 weeks. It's just, last 5 days. It's just amazing. I'm going to come back to a couple of these things. Let me go to the S&P. Here's what I'm talking about. Here's the last 5 days. Let me zoom in. Okay, and then I want to go to the S&P, the Elliott Wave picture for this, and I'm going to go to the weekly just to clean it up a little bit, make it a little easier. Now, it could very well be that I'm being too optimistic and looking for just a wave 4, and that, somehow we got a wave 3 complete in here, but and it did a little wave 4, but it sure, it just doesn't jump out at me as corrective enough. I mean, because here's a pretty strong little wave 2. And, we are in a fifth wave, a fifth intermediate wave up in here. So we have to see 5 waves. And right now, this is my best take. So at a minimum, I'm looking for this kind of a pullback. We had a pretty shallow wave 2. So now we'll see what kind of wave 4 we get. And when is this thing going to start? I mean, as we talked about, 2 weeks ago, here we go, pulling back for the 4th time, and I know that it's done variations of this for the last year and a half, but, then we just snap back. We got this pullback pretty sharp, and we just snap right back. But I got to say, the underpinnings of this are pretty weak. And we're going to come back to this and take a look at some technical things in just a minute. But first, I want to go to the Dow Industrials, and I'm going to go to this chart, the Dow Daily Chart. And I'm going to just go out like this, zoom in a little bit, because what I'm going to do is I'm going to take you back in time, and we're going to go to 1929. And we're going to look at how did this look at the top, and when was that top? Well, that top, the all-time closing high on the Dow Industrials and the all-time intraday high was back in 1929 was on September 3rd. Well, Friday was September 3rd of 2021. So it's kind of interesting that we got that date. I'm not saying just because of the date, this is getting ready to crash, but we are seeing some interesting dynamics, things not, confirming the price action, I guess is the way I want to put it. Now, September 3rd, 1929, that was the first trading day after Labor Day in 1929. And this year, September 3rd was the last trading day prior to Labor Day. So we'll see what happens. The Dow clearly peaked back over here in mid-August, at least so far. We'll see if this continues to play out. I want to take a look at a couple of our indicators that just are saying, okay, here's where we're at. What are we doing with the VIX? Well, what's the VIX telling us? The VIX is telling us there's no fear in the market right now. There's tremendous complacency in the market. Why? Because everybody just has been buying the dips and it's been working out, at least so far. When you look at the Mcclellan Oscillator, you take a look at that, we are slightly overbought. We are at a plus 68.6 is the reading I've got with the numbers I'm keeping on this. And that's very, very close to being, exactly what the Mcclellan guys are putting out. But the thing I noticed about where we are, being slightly overbought, notice this peak up here in September 2nd, plus 115. Back over in June, plus 115. Back in March or April, plus 113. And you go back over here to March, it got between plus 115 to plus like 125 or so. And so 3 other times we got right up into that territory and then we turned down. So we'll see what we have. Maybe we chop around a little bit, like right here in June, or maybe we just come right back down. You get below zeros when the selling pressure is starting to kick in. And you can see how we got severely oversold and we've gotten severely overbought. All right, so right now that is the picture. That's where we're at with the kind of the pressure being put on the market. I look at that like a tension type of indicator. And then when I look here at the percent of stocks above their 50-day moving average on the New York Stock Exchange, it's at 55%. The bullish perspective, you could say, well, that means more than half the stocks are above their 50-day moving average, and that's true. But when you also look at the picture, what's this been doing over the last, this year, so far this year, the last 8 months? What has it been doing? Basically, it's been trending down, okay? And what's the market been doing? It's been going in the opposite direction. Speaking of which, I know I've talked about this. I think I talked about this in the last video, the 52-week new highs. Okay, so if the market's trending higher, you expect more new highs to keep coming into the marketplace. Well, since May 10th, that has not been happening. What I'm showing in the red line here is the 21-day simple moving average. Well, we have just done nothing but trend lower since May 10th, even though the stock market is going in the opposite direction. And the dotted line I've got in here, what did I do? It's kind of hard to get to zoom in. What I did was I put the dotted line right at the close of the moving average on Friday and said, okay, well, where were we if we go back? Well, July 26th, we basically flatlined. July 26th, we were at the same exact level on the 21-day moving average. So we've just done nothing but flatline as the market is continuing to push higher and higher and higher. And I know I talk about the divergence on the market and all of that also. Okay, that's it for this video. Kind of a short, quick, just update. We got a 4-day week this week. We'll see what happens. And we'll be back. Feels good to be back in the office. And we are very happy about the result that we got out in San Diego. Everyone, if you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone, have a great week. We'll talk to you on the next video.